I see my service to you as trying to help you make money, but more importantly, I'm trying to help you not lose money simply because, with an upward trending market over the long term, making money will happen. You just don't want to start out in the hole by losing money. So I bring you today's video, which is likely the most unpleasant video to date. You see, last week I was hoping that the market would continue a sideways trend rather than the sell-off we experienced toward the end of the week. The reason is that the sell-off has done a lot of damage, and we may now be in a much more difficult situation. But rather than delay the bad news, let's get straight to the issue. We're starting out here with a chart on the spiders, the SPY, which is essentially a proxy for the S&P 500. It is the 20-year monthly chart. And if you recall, not too long ago, I was saying that the power had shifted from the daily to the weekly, but we didn't want it to shift to the monthly because that could be bad news. Well, it's shifting to the monthly. And as you can see here in the far upper right corner of the chart, the selling that occurred late last week has plunged the chart well below the 20 EMA. Being below the 20 EMA is not a really big deal, but moving so fast as it did last week, we are now in jeopardy of moving through that 50 EMA depending upon what comes here in the near future. But that's not necessarily the problem. Here's what I see as the major problem. The MAC, which is my favorite oscillator. The fast line has come through the slow line quite dramatically. I was hoping for a reflection at this point, such as we had here, but that reflection did not occur. We are heading down pretty fast. And you can see in times past when that has happened, what the result is. 2015, 2016, a pretty serious correction. Of course, we had the 2008, 2009 great financial crisis in that area there. And then, of course, the dot-com bubble in this area here. So I'm hoping at least that we can only have a correction that was maybe somewhat similar to 2015, 2016. We can recover from that. I hope it doesn't get worse, but right now the fast line is plunging pretty quickly. You see that there in the histogram, as well as in the price rate of change moving on down quite fast. The RSI well under 50, heading down, no stop in sight. Stochastic the same. The volume, as we discussed, I think it was in Friday's update, I'm somewhat encouraged that the volume is not higher yet, but we'll wait and see. And then to the Williams all the way down to negative 98.67. So definitely the power has shifted from the daily to the weekly and now to the monthly. And I'm going to go through a series of charts here and we'll see a lot of similar characteristics. So let's get to the next chart. And this is the diamonds. Again, it is a proxy for the Dow Jones Industrial Average. You see the same thing. The selling on Friday brought us well below that 20 EMA, heading down toward the 50 EMA. But the major problem, once again, is how fast that fast line moved through the slow line and it's heading down. So these characteristics are very similar to what we've already seen in the spiders, as you can see by each of these oscillators going all the way down into the Williams. Again, the volume is not high, and that is perhaps maybe the only saving grace at this point in time. But otherwise, it looks very similar to the SPY. Let's now go to the NASDAQ. And here we are taking a look at the ONEQ, which is essentially the Fidelity NASDAQ Comp Index Tracking Stock. It's another proxy. Moving through the 20 EMA, as we saw in the other charts. On down here, the problem, in my opinion, being the MACD, how quickly the fast line has moved through the slow line. There in the histogram, we see a very long negative red bar. Price rate of change moving quickly down, relative strength as well, stochastic, and in the Williams. All right, back up here to the chart. Now let's go ahead and take a look at the transports. We're looking at the IYT, another tracking stock, but this for the transportation average, and it's a 20-year monthly chart. See the same thing, yet the transports look like they have fallen not only below the 20 EMA, but the 50 EMA. And again, with all three of these things moving down, you essentially have the Dow theory taking place, where there's a confirmation by the Dow Industrials as well as the transports. Again, the MACD, how quickly the fast line is moving below the slow line. Histogram, negative. Price rate of change, negative. Relative strength, stochastic. And Williams, negative. Volume is only moderate. So let's look at one more chart, the 10-year. And this is our last chart, which is a CBOE 10-year T-note. We've talked about this before, and we've talked about how it has reached up toward this long-term trend line, at which point we expected there to be some problems. Oftentimes, that's what happens when it gets to this trend line. So it got above 3%, hit the trend line, and it's not necessarily hitting the trend line, it's when it backs off. And we saw this back off from that elevation above 3.0. We saw that back off fairly strongly in the recent weeks. Moving down here into the MACD, the fast line is looking like it's heading down. It has not gone through the slow line yet, but let's wait and see. It looks like it might just do that. Everything else is indicating that there is a downward trend here. Looks like the histogram is going down. Price rate of change moderately wants to head down. The RSI looks like it is heading down. Stochastics and then the Williams also are heading down. Back up here. So, in my humble opinion, I want everybody to hold on tight because we can have some difficulties in the market coming up here in the near future. So for today, that's ChewDog Charts. Thank you.